First up, about the equity markets. Indian equities, we've seen the Nifty entering correction territory now. It has fallen almost 300 points off the day's high and also hit a 4-month low. Auto stocks like Hero Moto and Mahindra were the top losers in trade today. But since the market's high on the 27th September, we've seen a major sell-off in our markets. The BSE losing 48 lakh crore rupees in market cap. And FIIs have stayed net sellers, and they've sold shares worth 1.53 lakh crore rupees. Let's just go across to market expert Ajay Bagga and get a sense of where these markets are headed. Ajay, always good to get your perspective. Tell us, the Nifty has now corrected more than 10% from its recent highs. What's the depth of correction that you foresee, and what will be the factors that spur that correction?
Yeah, Vikram, I would totally first, the question in the editorial take that you ask, is it temporary? That all depends on your time period, but definitely it's temporary. India is a mega trend. We have to invest in India on a decadal basis. You can't go wrong on a decadal basis. Now, coming to what is happening over the last 40-45 days. Three big issues that we are seeing in the markets. Markets were not cheap, and we have never been cheap. For the last 20-30 years, we are always at a premium to emerging market peers as well as developed markets because of the growth embedded in India, and it offers a diversified pool of investment options. So we get higher than the market kind of premium valuation. So we started off at all-time highs, not very cheap. Second, the earnings season threw up some googlies. One was that the demand, the personal consumption expenditure saw a drag. Second, we saw that the earnings didn't really materialize as expected. So we have seen a large amount of downgrades, and which has been the first time in the last 3 to 4 years that we have seen this scale of downgrades happening. So elevated valuations, earnings not meeting those expectations. And third, the US election uncertainty, the increase in the strength of the dollar, which is negatively correlated to emerging markets. It has an impact, but this time around, why are we having a bigger impact? When you are 19% plus on the MSCI EM index, so every dollar that goes out of emerging markets, 20 cents will go out of your market. So we started 3 months back with FI holdings at about $900 billion. Now with the market fall, plus the 14 odd billion dollars that they have taken out from the secondary markets, their holdings are down to about 825 billion.
Correct.
So 16%, Vikram. But this will happen tomorrow. If we are 30% of MSCI EM, 30 cents out of the dollar will go out, and FIs were overweight India. So these three things have happened. Now, how temporary?
Yes. Yeah. How temporary it is going to be is the big question right now. And festive season, like you said, haven't really spurred sales. FMCG clearly taking a knock. Earnings, like you said, haven't enthused faith. And even as the rupee is now losing ground against the US dollar, we had core and food inflation data causing worries, suggesting that the RBI is not going to be in a rush to launch its rate-cutting cycle anytime soon. Even US inflation data, we're seeing a rise over there. So what does that suggest to you? Are we in for a tough ride, even if you think of this as a temporary phenomenon?
We are in for a tough ride, but the market will bottom when, Vikram, everybody starts throwing in the towel. Right now, people are cutting checks. So especially the retail investors. So if you see FIs are down to 16%. On the other side, the DIIs are up to 16%, and there is an 8% holding by retail Indian households. So the retail Indian households through institutions and directly are owning about 24% of this market. Which is very significant because that is patient capital, that is long-term capital, that is capital which gets accrued month on month. The surplus is coming in, and you're seeing that surplus getting allocated to the market. So that gives us some amount of strength. What is happening in October, the DIIs met the FI selling. In November till yesterday, if you see, FI sold 25,000 odd crores in the secondary markets, and DIIs picked up only 18,000 crores. So now we are in the second order, Vikram,
Yes.
where DIIs are not absorbing all of it.
Exactly.
So the
So there
market
is only at a certain point to which the DIs are going to be able to match the kind of outflows that FIIs are transacting. But what do you see as the net effect of Trump trade now, Ajay? As far as Indian equities go, in his last stint, we've seen the kind of tariff war that took place. It made it tough for Indian steel, for Indian aluminium exports to the US. But his stance on China could benefit India's IT and manufacturing sector. Even defense and technology could get a boost if India-US ties get better. So can these sectors effect a rebound once the clouds clear on Trump's immediate priorities?
Yeah, definitely it will. But then you see 3 months of volatility because Trump will get inaugurated around Jan 20th, 21st. And then by February, you start seeing the policies and all. The good thing is you will know very soon, the trade representative, the names that are being put out. And you're seeing China hawks coming into their own. So that China plus one strategy will get a big boost. And now this historical opportunity is really India's to lose. We have to do better than what we have done on the China plus one. It has to be a coming together of industry, of regulators, plus a lot of PLI kind of schemes, plus the MEA working with the US to make sure that we get access to the US companies' technologies as a friendly nation where they can offshore. So it will mean a lot of convergence. Hopefully, our policy, regulators are working on it, and industrialists are looking at mapping this opportunity. But clearly, it's ours to lose. Last time around, Vietnam, Indonesia, Malaysia, all these have done better, Vikram. And if you see, because of their free trade agreement, which we didn't enter because China was sitting there, you can move goods freely from Vietnam to Malaysia to Indonesia to Laos to Cambodia. While within India, you have to move from Madras to Bombay, everyone will be examining your goods. So, very clearly, you need a regulatory impetus as well. And that's not going to be solved in the next 3 months. So, but there is an opportunity in Trump. How is the Trump trade? The Trump trade has proved to be right from September when people went into crypto, people went into the big tech, banks in the US, the deregulation beneficiaries. Look at the oil and gas, Occidental, which is, largely owned by Warren Buffett. Look at their results and the way they are paying down their debt. There are people building pipelines, Vikram, who are saying, let's complete these pipelines before Trump's term is over. So oil and gas will go into a major investment in the US. So all the deregulating companies, then mergers and acquisitions will really take off. Again, India could benefit there as advisors, as offshoring vehicles, as GCC vehicles. All those opportunities are there for India. And I would say we should have a department of the Trump trade sitting in the Niti Aayog or in the Department of Economic Affairs, which is focusing because this is the biggest opportunity for Indian companies, the Trump trade that you mentioned.
That regulatory cycle to make amends, to seek out the opportunities and, to be able to dive into this opportunity that exists on the road ahead, that remains one dream. But if Trump's trade and tariff policies do make it difficult to import foreign goods in the US, do you think that's going to stoke inflation and stoke it enough for the Fed to stop cutting rates, even tighten them perhaps? And if that happens, how do you see the RBI's monetary policy change that could affect the prospects of our financial pack in Indian equities?
Yeah, RBI is a very conservative central bank and they have some of the finest minds. I have been more than 3 decades in the banking circles. I know a lot of them who have grown over the years to senior positions. So RBI has it figured out, Vikram. They won't be cutting rates, not before April at the earliest. We have the problem with our own inflation, which came high, and food inflation, which is not correlated to the interest rate, but overall, the politicians find it easy to pressurize the RBI to keep the rates high then and try to choke the inflation. So don't expect any interest rate cuts in India, at least till April. The second thing on the US Fed, today's US CPI number has come on track. It's not much higher than anticipated. What the economist polls were showing, it's come around that number. So there is a more than 70% chance of a December cut. But after that, there will be a pause. Then they will wait. Though, if you look at the Fed speakers, right from Chairman Powell at the last meeting
Yes.
to the subsequent speakers, Vikram, they have all been saying that we will not react in anticipation of Trump. And if you look at 2018 meeting minutes, after 5 years, they disclose all the internal meetings. So they had models working, which
Correct.
were forecasting the impact, but they didn't act until the tariffs came in. So
Right.
don't expect a rate cut in Jan-Feb, but
Right.
don't also expect that the Fed will start raising rates. But they are in a spot of a bother.
Yes.
The good news is Musk and Vivek Ramaswamy.
Yes.
Just look at it this way. It's a house which earns 4.25 and it spends more than 6.
Right.
1.8, it borrows from the market every year.
Correct.
Now that borrowing has gone to 36, so it's become very high. And out of that 4.25, they have to pay as interest to the local pawnbroker and the worldwide pawnbrokers. So that house is in big trouble.
Right.
There is very little discretionary element in that spending that they can cut, but that's the 30,000 square feet view.
Right.
When, say, Hurricane Katrina happened,
Yes.
they were paying $2,000 for hotel room. So it is a very corrupt bureaucracy. We, in emerging markets, we call ourselves corrupt nations. Behind the curtain, what happens in all these nations
Yes.
and the way...
So how many sweeping changes happen is something that we'll have to track. But also very quickly, we've seen the Swiggy listing on the bourses. The IPOs have been coming in thick and fast. But do you see continued action in the primary markets now that we are seeing the bears take charge? Because some of that liquidity has been sucked out for the interest that we've generated in our IPOs.
See, this is being driven largely by domestic interest, and
Yes.
that will continue. So we have crossed 220,000 crores of primary market raises this year, and it will go even further. I don't see a problem, but promoters and their merchant bankers have to leave enough for on the table for investors. That is very critical. Otherwise, you will see. So we are mid-cycle. I've been saying that for a couple of months. We are not in the late cycle of IPOs where you only see froth and then you see crashes happening. We are still mid-cycle. There have been some accidents, like the EV two-wheeler and all those cases. But otherwise, more or less, people have been making money. And it will be a very watchful investor who will look at listing gains to come in. But even in the secondary market, the domestic flows are still continuing. So we have not reached the level of where, there's capitulation. Capitulation is where you will make the bottom for the market. We are nowhere near that. Everybody is saying it's a temporary blip. So maybe a couple of months, 3 months of some more pain.
Right.
And then people will say, go back to fixed deposit. That will be the time. But now a few companies have started looking attractive.
Right.
Only thing holding back people is how much more can it go? Because
Exactly.
very significant.
And that is an important question when the markets behave the way they are with these kind of volatile situations. You are bound to ask how much further, how much more pain is there in the markets before we see a rebound. We'll have to keep tracking and keep circling back to market experts like you, Ajay Bagga. It's always a pleasure getting in your perspective. Thanks so much for joining us on India Tonight.
Thank you for calling me. Thank you.
If you like this video, then like, share and subscribe to ET Now.